with the government shutdown, this has been a phenomenal market with so many stocks up huge for the year. But which ones can keep running? I mean, that's what we know. Maybe even away from the data center. All right, let me give you a big one. Take-Two Interactive. Buy. Yes, the video game powerhouse you probably know from their iconic franchises like Grand Theft Auto, Red Dead Redemption, and NBA 2K. In the past couple of months, this stock has really caught fire. It's now up roughly 40% for the year, in part because with EA going private, there's now a newfound sense of scarcity in the video game space. But mainly it's because the next installment of Grand Theft Auto, GTA 6, comes out next May. This is one of the biggest franchises of all time. Maybe not just gaming, but any form of media. Some could argue it is the #1 franchise of all time. Until that comes out, though, Take-Two shareholders find themselves in a weird limbo. How much the results even matter with an almost guaranteed blockbuster on the horizon? Well, they matter if the numbers are good. Take-Two reported its latest quarter back in August, delivering a strong top and bottom line beat. Net bookings reached $1.4 billion, surpassing management's own forecast, as well as $1.31 billion number that Wall Street had predicted. As a result, despite being only 1 quarter into their 2026 fiscal year, management felt confident enough to raise its full-year forecast for both net bookings and earnings before interest, tax, depreciation, and amortization. That said, Take-Two's guidance for the current quarter came in a tad softer, but the quarter was still strong enough to keep the stock running. Plus, it's not like this is some tiny company that's doing nothing until the Grand Theft Auto company franchise puts out its new edition. This is one franchise among many. On the conference call, management highlighted the continued success of their NBA 2K franchise, the latest iteration of which already sold 11.5 million units. These sports video games are so terrific. You know why? Because they get to release a single new one. Every single year there's a new one, and people buy them. Even more impressive, daily active users climbed 30% year over year, signaling healthy engagement. This surge in player activity also fueled a 48% jump in, quote, recurrent customer spending, end quote, because increasingly the video game companies find all sorts of things to sell you after you've already purchased the game, usually in the form of add-on content. Now, many of Take-Two's titles are still rooted in PlayStation, Xbox, and the PC, but they have now rapidly growing mobile business, too, after the acquisition of Zynga 3 years ago. Under the company's peak mobile library, that's their label, Match Factory posted record net bookings, growing 33% year over year. Toon Blast also delivered another strong quarter, growing revenues 22%. It was very impressive given that it was up against some real tough compares. None of these, though, are Grand Theft Auto, and it certainly doesn't hurt to have a highly successful mobile business. And it's not just these casual mobile titles driving momentum. The mobile adaptations of Take-Two's core console games continue to perform, with WWE Supercard boasting more than 37 million downloads to date. Still, everybody's focused on GTA 6, and for good reason. The last GTA theft came out 12 years ago, and it's now sold more than 215 million copies worldwide. They've actually seen a pickup in Grand Theft Auto 5 and Grand Theft Auto Online, which saw new players' accounts surge 50% year over year. Not bad for a game that launched in 2013. At the same time, Take-Two's recent releases have been earning some rave reviews. Following the success of NBA 2K25, the newly released NBA 2K26 appears to be off to a very strong start. And we don't have the official numbers yet, but some analysts have been sifting through the available data, and what they found is pretty encouraging. According to analysts at Cowen, since an early September release, NBA 2K26 ranked number 6 on the PlayStation's most played list and number 11 on Xbox's during its first full week of release. That's a step up from the previous iteration, which peaked at number 13 on PlayStation, number 18 on Xbox. Plus, they also pointed out that Twitch viewership for the NBA 2K franchise is up 34% versus the previous quarter. For those of you who are my age, Twitch is where your kids watch other people play video games. Not sure I see the appeal, but then again, I'm not the target audience. Take-Two also mentioned that their 2K banner is working on a, quote, college basketball experience, end quote. Now, we don't have any idea what that would entail. But it's been 15 years since the last NCAA basketball video game. Could there be a lot of potential here? Hopefully the players can get paid. What else? A few weeks ago, Take-Two launched Borderlands 4, another big franchise that was apparently well received. Given that this franchise has sold over 90 million units, I got to believe it makes good money. But honestly, far more important than the latest earnings report is the simple fact that just last week, the old Electronic Arts announced it will be taken private at $210 per share by a consortium of private equity firms, including the Saudi Arabian investment fund, Silver Lake, and Affinity Partners. The leveraged buyout came just 2 years after Microsoft acquired Activision Blizzard, the other huge American voice video game publisher. This was an industry with 3 major players, but now, with Activision gone and EA going private, Take-Two is now the only major publicly traded American video game company that's a pure play. Now, I think this is huge. Not only were some very sophisticated investors willing to pay a premium for EA, but Take-Two has real scarcity value now. If you want a traditional video game publisher, you either need to mess around with the Japanese market or bet on Take-Two. Sure, Microsoft and Sony have huge gaming divisions, but most of their sales come from other businesses. That's why I'm feeling really positive on Take-Two right now, even now, 8 months before the next Grand Theft Auto comes out. If you bought this stock 8 months before the last Grand Theft Auto in 2013, that would be in January 2013, and then you held it for the next 2 years, 133% gain. Here's the bottom line. Grand Theft Auto 6 is almost guaranteed to be a major hit. And in the meantime, Take-Two's already firing on all cylinders. And once EA goes private, it will be the only pure-play American video game publisher that's publicly traded. Just keep in mind, if you're taking the plunge into Take-Two here, you have to be able to stomach any delays to GTA 6. In fact, you should expect delays. Video games aren't like movies, which come out on a regular schedule. But I'm so confident in Take-Two that I actually hope that the next big game gets delayed and the stock comes down hard, which would give you an even better buying opportunity. Mad Money's back after the break.
Coming up, the lights are on and the servers are humming. Cramer on why data centers may be lighting up energy's future. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.